Okay, welcome to the Edge Builder series where we take some of the best traders in the world, dive into their edge, what makes them tick, and exactly how to implement that edge. Now, who better to start with than the stop hunter himself, Mr. Stephen Hoad? Stephen, welcome to the show.
Thank you for having me again. My second time on.
Yes, yeah, and I like to focus on past guests because the reason they got on in the first place was because they were super traders. So I think who better to ask? But and
Yeah.
you have been a multi-decade trader, independent trader, traded for institutions, investment banks. So how you trade, you're the perfect first guest for this series. If I had to ask you simply, what is your edge in trading?
Very good question. Um, and as you know, I really do focus on edge, and that's where I really start. Is do I have an edge, and then how do you get to the edge? Now I've got a lot of tools around that I use. As you know, I'm heavily into technical analysis and Renko charts, but that's not just the whole picture. I see it about probability. That's how I get my edge. So I put together stuff from different areas that I work out, maybe call it quantitatively or even qualitatively in some instances, and then put a model together. I call it a mental model, a trading strategy idea, test it to death, come out with the results, see how I can optimize it, improve it, and then sort of let it loose. I'd call myself a probabilistic trader. Um, so in the outside world, you maybe call it something like a poker player who understands the odds of every hand. Works out what his opponents have got and plays accordingly. And the same for my trading. I use tools that put the probability more in my favour, and I execute on that. And that helps massively for stuff like mental discipline, execution. Um, the whole picture heavily into automation as well to take away some of the human biases that we all suffer from. Even after doing it for all these years, I still suffer human biases, and I do Python coding now. I've learned that, and other basic systematic processes. I try to get as systematic as possible as well. So I suppose that's a long answer to your question, but there's a whole host of stuff that goes into making that edge.
Yeah. Yeah, but I mean, it sounds like that's the heart of your thinking is probabilities, and
Mm-hmm.
yeah, everything you do is around that, right? But you mentioned
Yeah,
Renko. So how
yeah.
does because a lot of people I think don't use Renko or may not be familiar with
Probably never even
Renkos.
heard of it. Yeah.
Yeah, yeah, which I think is when someone creates an edge around something, well, I think when things are new or not many people are using them, sometimes there can be edge in that also. But
So
how
that
does
was my thinking.
yeah,
Colin, that was my
yeah,
thinking. Yeah.
yeah. How does Renko kind of help you with that probabilistic approach?
Yeah. Okay. So I've been lucky enough to, well, my technical analysis background. I've been lucky enough over my career to try pretty much every chart type, every indicator going, and I've crashed and burned on lots of them. I've experimented with others, but I worked for a Japanese investment bank in when was it, the late 90s, and I saw these different chart types. And to start with, I dismissed them as they just look a bit of a mess. And then I started to learn from them and speak to the Japanese guys there and sort of got the background to them and actually realised that they were built to take out noise and make things a lot clearer and a lot more transparent than
Mm.
other chart types. And that instantly mentally sat with me. And I, yeah, it's not going to work for everyone because people might not like that chart type. But for me personally, I think it was really good in exposing an edge more clearly, a trend, a reversal, a pattern, whatever it is, across all markets. It wasn't just one. I experimented across all different asset classes, and it seemed to work um, really well. But that's where I suppose, out of the box thinking thought, well, originally Renko charts were built to exclude time. But as technology's changed, if you actually add in time, which I've done now, and as just by your ear up there, you can see my book that's just come out. I've actually put a whole big section on there how you can add time into Renko charts. And what that's done for me was, well, you have a candlestick, obviously it's got time, 5 minutes, 15 minutes, an hour, 3 hours. You can actually do the same thing with Renko, but instead of having the noise of the candlestick, having to learn all those different, pattern types and whatever, you can just dilute it all in just to one easy chart. But now you've got time, you've sort of got an even clearer candlestick chart or bar chart or whatever. So technology and how that's evolved has given, I think, another edge, more probability of it working. And I've gone to my quantitative days, I've got a background in that as well, MSCs and all that, and maths and stuff. So I've tested it to death, and for me, it's worked over the years, a decade. So,
yeah,
I've stuck with it. But then, as I said, time's gone on, I've enhanced it and added new things. Back in the 90s, there was a distinct, I call it, border between Japanese style technical analysis and Western style technical analysis. But now, merging the two of them together as well, which again I'll cover in the book there, gives you another edge. You can overlay a stochastic indicator or moving average or whatever onto the chart now, which you couldn't do before. You've included time, you've added the Western strength of these tools, and all of a sudden you've got a great, just purely technical analysis based strategy there. Obviously I enhanced it with other stuff, but at its core, found it really, really powerful. It suited me, and I've been, I suppose, splitting out my findings on my YouTube channel and stuff like that. And if people take it up and try using it, I think they might find something interesting there. Might be helpful to their trading. But it presents clarity and edge to me, which a lot of technical analysis, from my experience, didn't.
yeah, yeah. And can you just, for people that haven't seen a Renko chart, you should explain, I guess, the printing of a block. So, because it doesn't look like a normal chart, and we'll present one in shortly in one of your strategies. But can you just explain how that block gets printed?
Yeah, sure. Yeah. When you look at any chart, you have to predefine the block size. So you're relying on the price movement to create the blocks rather than time. That's its initial sort of remit. And that's the skill of the trader, the technical analyst, to pick that block size. Now, you could do it by the volatility of the price, a fixed amount that you think works. There's percentage of the price. There's various different ways of creating these blocks, but every time the price moves through a block, it creates a new block. So if you had a $1 block size and the price moves up another dollar, it then creates the second block. And then if it reverses back, then it will create the opposite block. So you get these patterns just built on price movement, which is, like I said, its initial remit was to follow price rather than time. So I don't know if that explained Renko, but it is a really simple concept. All you need, you can do it two ways. You can just take the closing price, or you can take the open, high, low, close, plug that in. It's really is a simple chart. It is so simple that's why, I don't know, people maybe dismiss it. It doesn't work. I think it doesn't work. Or one of the biggest questions I get on YouTube, they call it repainting. It's when blocks, or what happens is once you start to introduce time into the charts, which most charting packages like your Trading Views of the world do, what happens is you can get a run up in the price, and then because, say, you've set it to 5 minute window, then those blocks don't become permanent because it hasn't locked in that 5 minute period. So they disappear, and they can trick you into what people think they trick you into trading. That's the illusion, and they get very frustrated about that. And they call it repainting, but actually, you think of it like a candlestick chart. It's the same idea as, do you take your strategy on the close of the candlestick, or do you take it as it moves for a price within that candlestick? It's the same thing. You just got to readjust your thinking a bit when you use Renko charts. But that's probably the biggest thing. Again, I've addressed that in the book, ways around that and everything. But it's not a problem really once you get into it.
Yeah.
Very simple chart type, and that Japanese efficiency that we're all familiar with, and it really is nicely blended into that one. It works for me.
Yeah, yeah. No, I really like it because, like I said, it also reminds me of something I read when I was reading about Richard Dennis, and he was taking measures
Hmm.
of volatility, and
Yeah,
as price moved in one measure of volatility, he would increase his risk, and it's
yeah,
like trying to remove that noise from price. It's like how much. I know you made that point a couple of times, so I think it's important just to stress. I mean, how just because something has been volatile in a day doesn't mean your strategy or your position is wrong. It's just gone through
yeah,
some volatility, and if you can't handle
yeah,
that, you might close a position. And this happened to me recently. You might close a position just because you're
yeah,
looking at your
yeah,
P&L, you just want to be out of it, and then actually the position continues on higher the next week, and you
yeah,
deserve the P&L you got. But
yeah,
it's nice to keep things in frame.
yeah. So yeah, Renko does allow you to add in quite easily the volatility of the market.
Hmm.
There's rules and ways of creating the block sizes and adjusting them to the market conditions in the different markets. But I find you can broadly apply the same rules across all sorts of markets and timeframes, which is why I also like it. So you could call me a multi-asset trader because I can do the same in copper, I can do in the DAX or the Japanese yen.
Hmm.
Just find the right block size. Crucial to find the right block size and have a systematic plan around it. And if you do that, I think Renko works for you.
And what goes and I might be diverging a little bit, but I'd like to know what goes into selecting a block size in a certain asset class. You say it's the skill of the trader, but what goes into the mind of a skillful trader when they're trying to pick a block size? What kind of
Yeah.
considerations?
Well, my first thought is, what am I trying to achieve from that strategy? Obviously, the bigger the block size, the less signals. The smaller the block size, the more signals. So you can imagine if you're a scalper or a day trader, you want a smaller block size. If you're a longer term positional or swing trader, you might want a bigger block size. But there's the playoff there. You've got to get it right for the market, the volatility, and your strategy. So they're the things you're starting to think of initially when you're coming. So the first question is, what are you trying to achieve? How does this fit into my strategy? How many trades do I want per day? And then if you go too small, does it create too many false signals? So where's the balance that gets it right to give you a return, but not too much risk? Or I said that false signals and mess that you could get yourself in. So that's the skill and the judgment part. But you can create a quite formulaic process and overlay it. Generally, you can tweak it, but you can backtest it. You don't want to overfit it too much, and that's what I try not to do as well. Is keep it as broad as possible. So if I have a scalping strategy, it's got to work across markets. So I always say, well, this is the way I'll create the block size. Does it work in equity indices, commodities, FX? Yes, it does. Good. So I've got that theory idea right. I don't try and go, well, I'm trading crude oil. I'm going to, really manipulate it to make it work. Because often that sort of strategy approach will lead to failure because you're essentially chasing um, the market rather than letting it
Mm.
do its stuff, which is
Yeah,
what you want it to do.
yeah, yeah. God, and we will jump onto the chart now, but um, I was writing strategies for short-term, long-term trend following strategies for equities, gold, Bitcoin, and something else that drifts up. Equities. Yeah, some other asset class that tends to drift higher, basically.
Mm.
With the base case of, equities tend to go up over time. Uh, Gold is harder than the dollar.
Yeah,
Bitcoin they all have this kind of positive drift. I'm
yeah,
thinking, have I written that strategy now and it's overfitted because it's specific to
yeah.
like I wouldn't try and use that strategy on oil specifically because that oil tends to just revert to the mean or be quite a choppy asset to trade.
So you've got a great edge with your charts, your Renko charts. It's then the risk management side, the back testing, the stress testing, the portfolio optimization, the edge management, um,
Mm.
that sort of probabilistic theory stuff. All that then overlays on top of your strategy to get it to work. So it's not just I've got a nice Renko chart, looks like it works there. There's a lot more under the hood than meets the eye. So
Mm.
it's lots of components put into one to give you that edge.
And you would say that when you're building that edge with Renko, it should be applicable across all asset classes. It shouldn't
So
just
that's
work for.
my viewpoint. I try to make it work with the same inputs. So I'll make this up. I've got a Renko chart. I'm going to use the 200 moving average and 50 moving average across every market that I look at,
Yeah.
and I want to see whether it works across all those. I'm not going to make the moving averages go to 175 and 23 to try and make it work. I'm going to stick with my core tools and see whether they work in that environment. So,
Yeah.
and I'm also measuring it all the time and checking the results. Even when you're live trading, how are you deviating away from your expected returns and
Mm.
back tests and stuff like that. So it's
Yeah.
a constant job of enhancement and maintaining the edge over the longer term.
When you build that Renko
Mm.
chart, you kind of remove the noise and you're overlaying those type of indicators, Western indicators, to create something that works across multiple assets, right? That's kind of the
Yeah, from a
key.
pure technical analysis point of view, but I will have strategies that have other independent indicators that verify those results. So it could be a fundamental thing. I don't. Again, making it up. If you're trading oil, the storage or crack spreads or whatever you're looking at to verify what's independently. I like to. There's a rule in technical analysis called collinearity. Putting together indicators or tools that give you the same answer but come from different
Mm.
inputs rather than the same input. So call it a multi-legged model type of approach. So I do like to support it. Commitment to traders date. If it's longer term or so many different things I could think of. If you're trading the S&P 500, I like to use the VIX as a inverse relationship indicator to verify, because it's essentially options traders who should be right most of the time, putting in their perception of the volatility they think the S&P is going to have, and if it goes up, normally the price comes down on the S&P and vice versa. So you can use that as an alternative measure to validify your Renko chart. So I'm not just thinking like that the Renko chart works. I'm always seeking independent proof that idea works. And when it doesn't, then you work out why it's not working or evolve the strategy or model or
Mm.
whatever. You don't just sit on your laurels and eke it out.
Nope.
The aim is long term success, not a couple of weeks success. So,
Yeah. No, I like that idea of just cross verifying using different methods to get the same answer. So it's quite intuitive. But let's dive into one of
yeah.
your strategies. And now it's about, well, how do you actually take that and put it
Yep.
into a strategy that has results?
I'm going to keep this really simple. And this was a very basic technical analysis setup that I put together. This to me gives you the idea of how to put it together and what it's all about and what I do and how you can start doing it for yourself as well, essentially. And that's what is there in front of you. You've got Palantir, which has been a fabulous stock, US stock, probably one of the best stocks of 2025 so far. I think it's up about 60-70%. So out of all the struggles in the market, so also scanning for, I have run lots of scanners as well, say over stocks based off fundamental information, or all sorts of different social media scans, that sort of thing, to give me a short list, and then I'll plug them into the Renko chart to see whether they work in that environment as well. But this is going to be a raw technical analysis approach. What you can't see is that there's multi-strategies at play here. So I'll take an asset like this, Palantir, and you could actually just trade this market for yourself if you wanted to, or you can add it to other markets like I do. But there's multi-strategies at play. So the basics are getting, I'll start with the block size. So you can see these blocks, the red, the greens are the ups and the reds are the down. This is TradingView that I'm using. You click on there. The block size at the moment in this example is set to the average true range. But what I would do is work out the historical volatility of the asset, or the average true range of the asset, to get the block size, because I want the volatility of the market. So a stock like this, well, stocks are far more volatile, for example, than FX. So, a good move on an FX pair in a day is 1.5%. On a stock, it can be 10-20%. So you can't just use a blanket approach to the Renko block size, because the assets behave differently. So first of all, you've got to carve out the asset type. So we've got stocks here. So it's probably going to be a larger block size because of volatility, but the stocks trend very nicely. You were talking about that drift going on. That's more likely to happen in the stocks, factored in. So basically, once you've set the block size, that's the Japanese part of the Renko setup done. Then everything else really is Western tools added on to it. So I've got time in here. So that's the first change over the traditional Renko chart. So what I would be doing, you see it's 45-minute here, but actually I'd be trading it on a 1-minute chart, because this helps. I mentioned that repainting type issue where people get fooled by the blocks. You can just see that little pink one there. That means it's a block that hasn't completed yet. So that can disappear. If it opens the market, you can see the pre-market's up here already. That will disappear, and you'll get a chain of blocks going up to there. So that can create your full signal. So the lower the time frame, the less of these false blocks you get. So once you've got that cemented, you've got the right foundations for the block size in place. What I'll do is then start adding on the Western indicators. So at the bottom, we've got a stochastic indicator set to 533. And all I'm doing here is, the first set of rules are when they cross, that's a buy signal. When the percentage D is greater than percentage K, and vice versa for the sell, but also using the 80-20 line. With Renko charts, you'll notice that stochastics trend, they don't work to the traditional rule set that you'll learn about. They trend and stay in these overbought and oversold zones. So I use the 80-20 line. So if it breaks down, so for example, let's take an example here. If I got in, let me just draw if I got in here, I probably get out as the price moves back down through the 80 line, for example. So that would be a buy there, sell there. But as we go up to the chart above, you can see I've got a longer term moving average. Is that yellow line there? And because it's below it, that nullifies that trade. So you just stay out, right? So you're looking for positive, for a long trade, positive stochastic moves when it's greater than that moving average. Also got a short-term moving average in there, that pink line. That's to help me get in and out of the trade. So as you can see, for example, if we went short here, then we would follow that trade down, but we would get out as it gets through that pink line. And the other sub strategy on here is this two white lines, which is a Donchian. You mentioned Richard Dennis. So what I've done here is I've taken it a bit of a step further, and there's a nice bit on the old book about this. I've created a hack around this Donchian setup. You can do it with Bollinger Bands as well. If you click on there, it's actually in Russian. It doesn't really probably help much of your audience, but there's an offset in there. So I created an offset with a Donchian band. So normally Donchian bands, you just take the highs and the lows within a range. But if you offset them, you then start to get these nice breakouts. Can you see as it goes out the white band? It goes up. So the ultimate trade here, actually, and remember, look at the time period down the bottom. You're only talking a couple of days worth of data there. So you don't have to be greedy with Renko. So you put 10 assets together, you start to build a portfolio up. So you be patient with your trade. So this one here, I'll give you a trade example. We got the stochastic buy because it's crossed up. We're above the moving average. We're above that moving average. We've broken out of the Donchian band. So we then just literally let that do its stuff. And as it comes back down, we get out. And I'm not worried about risk returns. Like so many people get fixated with, oh, you need 2 to 1 and 1 to 1. I backtest this. So all that information would then be put into my backtesting engine. I run that back over as many years as I can and through different scenarios to get the results. If I've got an edge there, then I'll deploy that Palantir stock into my portfolio. But I know that if I just follow those signals over time, I make money. So I don't need to worry about 2 to 1, 1 to 1. And people will look at this chart and go, oh, well, look at that period there. It's really messy and you're going to get chopped out. And I take the trades anyway, because over the long term, you get a trade like that, right? That's, and you put your stop loss maybe below there, roughly maybe 3, 4 to 1 trade there. So if you get small ones, 0.2 to 1 and 0.5 to 1, a couple of losses over that whole period, I'm making money. And then you put that together with 10 different assets who might be executing trades at different time periods. And then your P&L curve that once was sort of like that, because you put 10 together, becomes more like that. So that's when the next stage of optimization and trade sizing and all that sort of thing comes into play. So I don't know, does that give you an idea of how? Yeah. Then this one, the reason I did this, an Indian hedge fund got onto me and they said, can you build me something in Renko? And also at the same time, I was running my YouTube channel and people go, oh, this is a load of rubbish. It doesn't work. So I went, okay, I'll build a system and I'll run it live for a year. And this approach made 300% in 1 year. And yet, obviously, the Indian hedge fund didn't want to give me the money that I wanted for it. So I kept it for myself and I put the results out there. But I refined it over time and it's been working from 2017 to this date. Really, it's quite simple. It's what it is.
What's the kind of average? Because I know you mentioned edge tends to erode sometimes and you have to tweak things.
Yeah.
But say this strategy, that's now 8 years ago, on average, what has it been kind of returning every year?
Yeah, so it's been, best year was that year, the first year, just under 300%. And then worst year, I think it's about 40%. And then probably around about 100%, 150% as another good years. So you take the average between 80 to 100%, that strategy, scaling it up. It ended up attracting some interest from US hedge funds and stuff like that as well. But
yeah, I can see why. Yeah,
and you'll see in a moment. I've got the statistics for it as well. It has a good Sharpe ratio. There's a lot of statistical information I look for as well to to make me happy that it's worth trading.
Yeah, and I just had a couple of questions on the strategy, right?
Yeah,
So that crossover on the bottom, is that
yeah.
stochastics and RSI, or is that stochastics and a
No,
moving
just
average?
stochastics. Just stochastics. But then you're
Okay,
talking that bit at the bottom there.
there's two lines, so there's
Yeah. So let me drill down into it for you.
yeah.
Percentage K and percentage D, they're the makeup of the stochastic indicator.
Okay, okay. So that you get that crossover,
Yeah.
you get a
Let me
breakout.
clear it up.
Yeah, yeah.
Yeah, there you go.
So and you get the breakout in the
Yeah.
Donchian channel,
So
and
we've
when
got
you
the
say that,
crossover.
yeah, and then we're above the 200 moving
Yeah, we're
average.
above that. We're above the 10. That's a 10 period moving average, by the way, that pink line.
Yeah,
And
and
now what you can do, this is what I do to this strategy. I've broken it into two sub strategies. So
mhm,
you can ignore that Donchian breakout for a start, and you can just do it on what we've got there. It's crossed, it's above the two moving averages, and you trade it. So that can be one strategy, or you can
yeah,
forget the stochastic and you can just wait for the breakouts. It's above the two moving average and it breaks out. That's another strategy, or you can put them all together, which in this example, which we went through, is all of them together. So it's done the
yeah,
stochastic, it's done the moving averages, it's done the breakout, off you go.
yeah. And
And
when
the
you say we can
stop
do,
loss, I'd probably put between, depending on how conservative you want to be, what type of market you're trading, you can put it below the turn there or below the moving average,
mm,
up to you.
yeah,
And like I said, that gives you a nice risk, as we could see there, a nice sort of risk return on that
yeah,
trade.
big time.
Picking out
And
for the viewers, I'm picking out an obvious one there, because if you
yeah,
went through that, there'll be some messy ones. But that's where I then tell people it's about the long term. If
mm,
you've done the back testing and the homework, you know that you might win one big and then you have three or four small, average trades or a couple of losers. It's knowing those things that help you stay in the trade and strategy longer. And you were
yeah,
saying about getting out of a trade, which you were losing and you didn't want to. Because I know that data and information, I go, okay, well, it's the period that it's in.
mm,
I expecting some losers to come along, but that's why I then build the portfolio around it, optimize it, like drawing with that chart. If I left this one to its own, I might get results, a bit, like this. I know it's going to win overall, but when I'm looking at a Sharpe ratio analysis, I want it more like that. So that's why you add in other assets to get you to that like nice 45-degree slope, as close as you can, and a higher Sharpe ratio. So,
yeah. And the offset in the Donkin channel, is
hmm.
that what does that offset do, as opposed to just
So
a
it just moves
traditional?
it. It moves it forward. It's a bizarre thing. It sounds like it's stupid, but it shifts the Donchian bands forwards too. So, but what I
Oh,
found is it then creates breakouts, and you can do exactly the same in Bollinger Bands. And by the way, going back to Renko, this doesn't work in like candlestick charts.
mm,
This offset thing, and there's,
yeah,
like I said, a nice chapter in the book about that, and how it works for Bollinger Bands. Um, it's because of the clarity and the way that Renko blocks are created allows this shift to work, and that's, you're talking about edge. That's what Renko's created, an edge for me because of how it is compared to another
yeah,
chart type. So
yeah. No, I love it. I think it's great because I mean, I think it just mitigates that thing we all get lost in sometime, which is the noise in price charts. Because unfortunately, I think what I've come to accept is sometimes prices can be quite random unless it's framed around a certain event or something that's quite obviously moving price. I think there's a randomness to it that people read into, and then you get lost in that. So I
yeah, it
think
doesn't
this.
matter how much you backtest, work out. When you're live, the mental side comes into play,
Hmm,
and that's why you need to do all your homework around it, because it makes trading a whole load easier if you know those expectations around what you do. You do less silly things. You make less mistakes.
Yeah.
It works for my
Very
brain
good.
set. So, yeah.
No, 100%. And let's run through quickly. I know you said you have some statistics there.
Yeah,
Let's
sure. Yep, yep.
see, because I
Let's
think
see if
that's an
I.
interesting side to people as well. Because people mention, even me, I've got back tests, but I suspect that they're not optimal.
So, for example, right, let's start. So, this was over this period here, um, years worth of trading virtually. And what I've done here is this garnered interest from US hedge funds. So, they looked at my data and split it even further. So, they took the products and markets that I traded and broke it down into different approaches to see whether you could improve the results any further. But on this tab, you can see the raw results, how many trades I
Mm.
did over a year, 1,000 trades, um, win rate 89%. So that sounds good to start with. You can see the risk return is
Oh.
quite low, 0.2. But
Mm.
because I'm 0.2 to 1, so for the viewers, that means for every pound I'm risking, I'm only making 20 pence, 20 cents, whatever. So you can run winning strategies with those sort of ratios. So that's why I say I don't sit there worrying about, this is a 3-to-1 trade or a 2-to-1, because I know over the
Yeah.
longer term, if I maintain that win percentage and risk return, I make money. And as you can see there, 279% was the performance over that year, and that's the chart here, the cumulative P&L over that period. You can see a few drawdowns that you've got to wear through. Again, I was expecting them, so I didn't stress. So because they were in the back test.
Yeah.
By market type, you can see, it's quite spread out. Even try with a few cryptos in there.
Hmm.
You can see the risk returns, the wins, number of trades. You can see the max drawdown about 15% over that year. Average monthly return 10%, best month 29%, worst month -8%. And you can see
Yeah.
daily P&L distribution. I monitor everything with value at risk. Again, going back to my risk management days, so I can see whether it's falling within the model, whether the exceptions are to the daily P&Ls. I always explain everything.
Hmm.
You can see the monthly breakout, how many trades per month, the average days. This was a more of a longer term holding strategy. So you can see the average days for the length of the trades vary from, in April, less than a day, to in August, 11 days. That's because that's
Mm.
what the signals were telling me to do. So I follow what it says.
Yeah.
The wins, the losses. You see the win ratio by month. Worst month when I started, May, 68%, but got 19% return on there. But the risk reward was a lot higher. So that's why that works. But you come down to somewhere like here, 96% win ratio in October of 55 trades, but the risk return 0.09, but I still made 13% in that month. So it's,
Yeah.
how you put it together. And they're all the trades that I did. But like I said, then I broke it down into these different approaches to work out, was there, if I traded only futures markets, for example, or if I took a different style of hedge fund approach, which was more aggressive with shorter time periods and holding, or
Yeah.
different things, and you come out with like different sets of results. I'm just trying to give you this so you can see how my thinking works and how I put stuff and try to optimize and enhance stuff.
Yeah.
Just to give you can see what Sharpe ratio, adjusting, unadjusted. We're running,
Yeah.
3 to 8 in different strategies there. The actual results, Sharpe ratio wise, I think I put it on there. 3 to 6, sort of over that period. So it's pretty decent year of trading. So
Yeah. Well, no, to be honest, this when I saw that max drawdown, as someone that's been working on strategies recently in Pine Script and stuff, when I saw that max drawdown at like 15% or something for a circa 300% return, that's mental. Yeah, yeah, that's really. And does that account for costs,
yeah, yeah,
Stephen? In that,
yeah,
wow,
yeah.
it's just great to see that level or that standard. I think it's like I know I am miles away from that level. But I think to
That's
see it
30
is,
years of putting it together, Cole.
yeah.
I've got a few more years on you, then.
Yeah.
So you've got
But
time.
I mean, I
So
think, yeah, I think I'm making the point badly, but unless you see it, sometimes, it's hard to know where you should be. And I think that is where people should be. Maybe not that far, because it would probably take me a year and a half to come up with a spreadsheet that looked like that. But um, I think you just, in terms of whatever strategy you have, if you can put it through that level of on the microscope, you can really be honest with yourself that,
well, that's
this
what you've got to
is,
be, really. You're only cheating yourself if you're not being honest with yourself. So what's the
yeah,
point? So you're in the job
yeah,
to make money in the long term. Why cheat yourself? So if it doesn't work, can it? Move
mm,
on to the next idea. Reinvent it, make it work, and find something that works, and then create a process around that allows you to run that for the long term. To me, that just makes sort of business sense rather than
definitely.
trading sense. It's like
Does it
running a
make,
business. You wouldn't do the
yeah,
same if you're running. If you want a successful business, you do the same. You've got accountants, you've got risk managers, you've got different areas that are always on the case looking to optimize your performance and your returns, whatever type of business it is. And it's the same mindset I think you need in trading. And there's a lot of skills you can have: data science, computer science, that you can throw in there these days to make it a lot easier and quicker. If you've got those skills, very helpful. But you don't need to. You can start from the raw, simple. That was in Excel spreadsheet and a bit of coding on automation. But I think anyone can do it, really, if they apply themselves these days. So,
mm. I think I like that you said in there, it makes sense because you're in this game to make money in the long term. I think if you can, if before you dive into this stuff, that you figure out what you're in this game for initially, it'd be quite
mm,
helpful, because I think that makes sense if that's your goal. But I think a lot of people come, maybe they don't have a goal, or maybe their goal is to make money in the very short term, or to sound impressive, or people come to trading for all kinds of reasons. So I think, yeah, it's a great point that get that reason right first, and then all of this stuff, yeah, does make sense. And once you see this as a business, but
mm,
I wonder how many people do. Or I think I definitely didn't up until a year ago, I think,
yeah.
and then, yeah.
I think they watch too many wrong YouTube videos and TikToks,
Absolutely, yeah, yeah.
because it's not like the TikToks
No,
of
no.
this world. I can tell you, it's a lot harder work. And if it was that easy, everyone would do it, and there'd be no edge. The edge wouldn't be there. So I can
Yeah.
assure you, most of them guys couldn't do it for the long term. So they might get
Yeah.
lucky for a month or 6 months, but try doing it for 10 years. That's the
Mm.
mark of success, I think, in this.
Yeah. And I would add, if you want to watch the right videos, please go to Stephen's channel at the Stock Hunter.
There's no
But
glamour on my channels. It's just boring stuff. Uh,
well, it's this sort of stuff, and I think, I've created this series to give people an idea about what's behind the number, what's behind the success, and how you can implement it. But you do that on your channel pretty much every day. You have strategies similar
yeah,
to this, where you're creating an edge, showing your back tests, and how basically how anyone can do that
yeah,
as well,
yeah.
right? So not only that, you have this brand new book over my shoulder has come
Oh, I've
out
got over my
recently.
shoulder as well, if I can reach it.
Yeah, yeah, it's
So everything we've gone through today really is in there.
yeah,
That's how, and it's not just, oh, this is a chart, this, a strategy, copy it, go and win. It's how, what we've talked about, building a trading system. How do you automate it? How do you risk manage it? How do you optimize it? It's more than, to me, success in the trading world is more than just that initial edge, like we talked about, the Renko chart. And I think that's a huge important part of it. But there's so many more parts that go into it to make it work, and that's what that book and my YouTube channel is all about. Really, it's just disseminating what I've learned. And if you want to watch it, you can. If you don't like it and you think it's a load of rubbish, I don't really care.
yeah,
But it's up to you. Horses for courses and everything. It's the way I do it. And if you like it, you like it. You don't, you don't.
yeah. And if you don't, Don't just close off your mind things, because just I know lots of traders that trade in lots of different ways, and they can take things from people. Like, you have an amazingly quantitative approach, but you're also quite creative, very thorough. You've loads of, you told me about the idea of mental models, preference functions. All these things
Mm.
are like things that are kind of unique to you or unique to your career and who you've worked with.
Yeah,
They
yeah,
can be brought into your system too. Just because you may not want to use Renko chart doesn't mean that you can't go on to your channel and learn something and then go away
yeah.
and
No, no, and
put it into your own process.
I've been doing it for 30 years, and I'm still learning. I will see
Mm,
someone, and I think, well, actually, they've got a good point there. How can I put that into my world and learn about it and adapt it and adopt it?
yeah.
Don't be too big-headed that you think you've got something great, because you always need to know that next edge, that next, bit to keep you going and going. Think times change, the world changes. You've got to stay ahead of the curve, and don't be have an ego that you think you know it all, because you don't. And there's so much to learn, not just from that. You can pick ideas up from outside the world of trading and put
Mm,
them into your stuff as well. Way people operate businesses, and sports stars, how they perform at a high level, and get that into your trade. There's so many different things you can do and learn. So I keep an open mind on everything,
mm,
and will always do that. So
yeah.
you're not big, as I think they say about in football, that you're not bigger than the team, or you're not bigger than the game, or
Yeah.
whatever. It's exactly the same. Trading's tough, and it can bite you very quickly, and you're never bigger than game, and so you've got to keep on top as best you can.
Right, Stephen. Been an absolute pleasure talking to you. Thank you for
Thanks for
that
having me on again.
breakdown, a look behind the curtains as well.
Yeah,
I think is really useful. And yeah, thank you for being the first guest in this series.
yeah. Thank you for having me. Good to be back.